Good afternoon, everyone, and welcome to our YouTube live video. My name is Glenn E. Tompkins Jr., Esquire, DDS. Yeah, I'm none of that stuff. I am Glenn E. Tompkins Jr., senior instructor here at VectorVest. Glad to be here. Thank you for being here for Trending Thursday on YouTube Live. So, if you can hear me and you want to chat in, by all means, please chat into the chat box. Keep in mind, unlike all of our other GoToWebinar chats, you guys can see what you are typing into each other. So Jay, make sure you're typing nice. Be nice. So I know Jay is here. Kirby's here? Kirby's here. All right, Kirby is here. I'm glad. Mary is here. Mary was at our Hot Stock panel yesterday. It was a great panel. By the way, sitting to the right of me is Joey. Say hi, Joey.
Hello.
I said say hi, Joey.
Hi.
There you go. He's my producer. And just to let you know, why we all looked so good yesterday is because Joey was in the background running the producer for all four of the stock panelists yesterday. So Joey is the guy that does make me look good. It doesn't take much work for him. He just needs to sit there and just, I'm the talent.
Full-time job.
It's not a full-time job. Glad to be here. Is that makeup? No, see, Joey is so good that I don't have to wear makeup. I don't have to wear makeup. And how about Job said you did good, Joey? You did do good. I know that there was a lot of moving parts for our panel yesterday. Joey is the guy that stays on top of our cues and all of that stuff. So hello to the talent and Joey, the talent maker. Wow. What's up, Tom? How are you? How you doing? It's Halloween early this year. Wow. Jay, can you put him in timeout? That's Jay?
Absolutely.
Put him in.
Timeout.
Keep walking. Thank you, Job. Job said it was a great panel yesterday. Hopefully you guys tuned in for that. For the new people who may be here for the first time watching this, welcome to you as well. This whole idea of Trending Thursday is taking a look at what's going on in the market, what news is making the market the way that it is, and looking at some stocks that are in the news, and taking a look at those as well. So that's what Trending Thursday. So Trending Thursday doesn't always mean that stocks are bullish. Sometimes stocks may not be that good, and we'll take a look at that. We create a watch list of all of the stocks every week, and what we'll do towards the last half an hour or so, we'll be looking at stocks that you want me to analyze, which I can do. So it'll be a little bit of a quick fire, shooting from the hip, nothing that's prepared. So have stocks in hand so that when I ask for them, you're ready to type them into the room. Do not type them now, and do not type Tampa. Do not type them in the room, all right, because that was the joke of the day yesterday. That was really the joke of the day, so do not type your stocks in yet, but have them written down, have them in mind so that when I do ask for them, they're ready to go, and we can take a look at analyzing stocks, your stocks, again, stocks that primarily may not be in the news. So how do we always start? We always start every session by looking at what's going on in the market. And the tool we're using is the VectorVest software. VectorVest is a stock analysis and portfolio management system. With VectorVest, you can analyze stocks better than anywhere else in this industry, I feel. Now, I've been here for 15 years. Do I have a bias? Sure I do. But a lot of the people that you see in here, really, you see Tom was already typing Tampa. For all of the people who may be new, where does I start? See, Tom just threw me off. What was I just saying?
You shouldn't have read it.
I shouldn't have read it. I know. Dang it, Tom. You just threw me all off. Anyway, new people, have your stocks ready. And oh yeah, talking about market timing. Every time we start off, we always look at what's going on in the market and what's affecting the market. So we do a little bit of a market overview to a certain degree, but let's see whether we should be bullish in the market, whether we should be bearish in the market, and that's where we'll start off. So let's start off with the home page of the software. The home page of the software will give you a good insight as to what's going on. So here we are. We're looking at the VectorVest software. We're looking at real-time, we're looking at real-time data. Is this live? Yeah, it is. And our market timing gauge today is one tick into the green. Our guidance is VectorVest does advocate caution when buying stocks at this time. If we go look at all of the top, where is, oh, there they are. Here's our quick list of, man, who moves this stuff around? You. All right. Anyway, here's all of our major indices. They're all up today. So why are they up? We're going to talk about why they are up today because that's part of a trending topic within this whole spectrum of market analysis. But everything is up to include our VectorVest composite. For those of you who are new, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Currently, we're tracking close to 8,300 stocks. We look at the index arithmetic average of all of those stocks and we provide a price. So the average price of all of those stocks is trading at $46.78. We track that indicator on both the week over week and day over day basis for the idea of timing the market. And yes, we do time the market. We don't predict which way the market is going to go, but we follow the trend of the market and keep our subscribers on the right side of the trend. Also looking in our color guard, which we should use like a traffic light. What's the main color you see? Yellow. What happened today? Well, we got a green light in that color guard pricing column, which will deteriorate in the next couple of days because when these days get down, we won't be able to get green lights on those days. So the market is moving up. Are we feeling more bullish? Well, I'm feeling more neutral in the market based upon what we see in our color guard. Now, our color guard tracks three of our market timing indicators. The price of the VectorVest composite in this price column, RT, which is one of our core proprietary indicators. RT looks at the relative timing of the market. Is the market in an uptrend or a downtrend? Above the value of 1, the market's in an uptrend. Below the value of 1, as we are right now, we're still in a downtrend. The BSR, or buy to sell ratio, is an indicator of the health of the market. Below the value of 1, the market is showing signs of weakness. So there's still a lot of bearishness, a lot of weakness, a lot of neutrality in the market. Keep that and take that as it is worth, all right? Keep it that way. So the next thing we're going to do is look at the market timing graph. Remember, we just talked about that VectorVest composite. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track. What you're looking at on this graph now is the movement of that composite, that movement of over almost 8,300 stocks. When you're looking at the movement of that many stocks, you can definitely feel when the market is bullish. All right, look at that nice up run. When the market is bullish, when the market is bearish, look at that pullback on 8,300 stocks, and when the market is neutral. Now, if I move this into a tighter time period, let's go to the 3-month. All right, good morning or good afternoon, Marie. Oh, Santi, there you go. Hi, Santi, I haven't seen you in a minute. How are you? Glad that you're here. Glad that you're here. See that Tom with that fainting goat? See, stop messing with Tom J. All right, so here we are with the market timing graph. Here's the movement of the over 8,300 stocks moving down. I have moving averages on the graph of a 3 and an 8 exponential moving average. As the market is moving down, found a level of support. Nice rebound yesterday, nice follow through today, but what's going on? A lot of selling pressure on this candle that's open today. So the wick shows you as high as the price went. The price of the composite went as high as $46.86, and right now it's trading 20 cents lower. Look at the bears pushing down on today's activity on the VectorVest composite. So, can I be bullish? Well, we've got 2 bullish candles. Notice that both bullish candles are still inside the big down day. Both of these candles that were moving up are still inside the big down day. So, have we really overcome this down day? Not yet. This is why neutrality is the key word of the day. So looking at the overview, this is where we stand. But now, let's take a look at what news is driving the market this way. We're going to open up the first story. The first story deals with, did I do that right, Joey? Yeah, okay. The first story deals with the news in the market, which is China. China is really very volatile back and forth, which is causing the market to go up or down on any particular day. President Donald Trump tweeted he will meet with Chinese Vice Premier him on Friday. Stocks rallied on the news. So we had now 2 solid days of the market moving up. But remember, we looked at the latest candle, today's candle, a lot of bearish pressure on that green candle. However, a White House spokesman later told CNBC's Kayla Tausch that the South China Morning Post reports were inaccurate. Futures recovered slightly. The South China Morning Post reported Wednesday night that high-level talks would only take place Thursday. Stocks futures plunged overnight. Notice that the news in China is moving the market back and forth. Thus, the volatility in the market is high. Trading on high volatility, it makes it tough to stay on one side of the market or not. The people who are taking advantage of high volatility are the option traders, where they are probably selling options right now, taking in a big premium, but utilizing time to make sure that they're right in the direction that they're picking. So think about it from that perspective. All right, so there we are. Big news that's moving the market. And now another thing that's moving the market coming up from that perspective. Last week, U.S. adds 136,000 jobs in September. Unemployment rate hits 50-year low. That should be fantastic news for the market. Fantastic news for the market, but the market is still struggling to move higher. All right, so keep those two things in mind that are moving the markets globally, or actually moving our markets here. And I'm going to go back into the software, and I'm going to bring up our list of stocks that we're going to look at today. And because the market is doing what it's doing, well, let's look at the VectorVest composite. The VectorVest composite is currently fairly valued, because we valued that movement of almost 8,300 stocks. The relative value upside potential on it below 1. Relative safety, so the fundamentals in the market are not so good. The relative timing in the market is not above 1, so the VectorVest composite is not in an uptrend. So looking at that, earnings growth rate on the market is sitting at 5%. They're growing their earnings by a rate of 5% overall. On the over 8,300 stocks, earnings per share is positive, sitting at 1.17. Now, a lot of people will use an indicator like the SPY or the spiders. Well, as an ETF, I will not be able to get the values on relative value and relative safety. But the SPY is still overall in an uptrend because the RT is above the value of 1. And we look at no earnings growth, no earnings per share on an ETF. So overall, even though the market is getting to feel a little bit more bullish, a little bit more bearish and neutral, the spiders, though, are still in an uptrend, whereas the VectorVest composite is not. So looking at the news that's moving the market, and now looking at, I'm going to look at both the spider and the VVC as far as on a graph. All right, we already looked at the VectorVest composite, but here's the spiders. And I'm using a 20-day exponential moving average. Where are the spiders doing? They're falling. Even with the move to the upside in the market in the last couple of days, where did the spiders stop? All right, Tom is here, right? Tom, what are you going to tell me? Where did the spiders stop today? Look at that, and from that point, what happened? The bears started pushing the price of the composite down. There you go, 2 big down candles. Ouch. Well, no, that was here, Jay, where we had 2 big down candles. But look at the wick of today's activity. Is right at that 20-day exponential moving average. Did not break above it. And that's right, Tom, this stuff really works. How about that? Makes sense. If the market is more neutral than anything, the price of the spiders was not able to eclipse at least the 20-day exponential moving average. Good time to be in the market when the SPY is above the 20-day. Not a good time when it's below, and currently still below, even though it's trying to have a little bit of a resurgence. And again, we already looked at the VectorVest composite. There it is again on the 20-day exponential moving average. Below it, let's take off the last close. Below it, not only that, look at the volume. Why is the volume falling? Overall, what's the market doing? Over the last 7 trading days, 1, 2, 3, 4, 5, 6, 7. Over the last 7 days, what's the market virtually doing? Moving sideways. All right, so there we go. I do like the earnings on the VectorVest composite still moving higher, but the market is moving sideways and below the value of the 20-day exponential moving average. By the way, Kirby says Marie Lala, St. Louis, has a user group meeting this Saturday. What part of the world are you in? Look at that. Kirby's trying to point out how to join a user group. And Kirby is a user group leader in Missouri. And then we also have Alessandra here in Texas as well. So we've got 2 user group leaders. And I love that they are here supporting this live presentation. I thank them both for being here. All right, now we're going to get to the next story. The next story deals with cannabis or weed or whatever you want to call it. Cannabis stocks slammed as MedMen abandons deal and Aleafia drops Alfria, one of the biggest weed companies out there, as a supplier. And the ETF is more than down than 2% as the broader market falls and vaping-related illnesses unsettles investors. So that whole idea with the weed stocks or the marijuana stocks or the cannabis stocks, whatever word you want to use, all right, whatever words you want to use, this industry is getting affected by a lot of the vaping incidences, which are looking at THC involved in that. Cannabis stocks were lower Tuesday, weighed down by losses on the broader market after the U.S. blacklisted Chinese tech companies with the collapse of a merger and ending a supply agreement, adding to the gloom. Late Monday, U.S. blacklisted 28 Chinese companies because of their alleged role in human rights violations against Muslims. And there we go. Against that background, the ETF MG Alternative Harvest Exchange Traded Fund, MJ, was down 2.4%. That is the weed industry ETF. All right, so you can track that and trade that as one ticker symbol as opposed to investing in individual marijuana stocks. 33 of its 38 constituents stocks declining. The Horizons Marijuana Life Sciences, HMMJ, was down 2.4% with 41% of its 54 member stocks lower. So let's go peep that out. Let's get back into the software. And that stock was the ETF Alternative Harvest MJ. How about as an ETF? Again, the price and the value will still remain the same. RV and RS cannot be calculated. RT, though, tells me that the marijuana industry is in a downtrend and is currently a sell recommended industry. Let's go take a look at the graph of it. Man, weed is just getting beat to heck. This is a 1-year graph. Now, remember when marijuana stocks were rolling back in, literally rolling, you get it? Anyway, back in January, above the 20-day exponential moving average. Look at that run up, beautiful. How about it bounced off of that 20-day and went up some more? Since then, below the 20-day exponential moving average and just been rolling down. Big down day today. Let's put this on a 3-month graph. Big down day today on big volume. So not only is the marijuana industry falling, but it's falling on big volume. People are selling their marijuana stocks. All right, CBC puts, never puts. CGC puts, there you go. That's probably a good put to put on if you want to play the individual stock. But if you want to take advantage of the whole industry, this ETF, the MJ ETF, might really be a great opportunity for you to take advantage of a prosperous opportunity. Do me a favor, Rich. Does MJ have options? Does MJ have options? I know companies like CGC do, but does MJ have options? Tom says how to join any user group. If you don't have if you don't have a VectorVest, join. There you go. Who put that up? Look at that. Tom is doing some help for us. How about that, Tom? Join. He clicked the link to take up a $9.95 trial, and Joey will post later in the webcast. Thank you for that, Tom. And Trader Shark, Trade Shark does say it does. How about playing puts? And Maria, how about playing puts on the whole industry instead of an individual stock? That will expose you to less risk with one ETF rather than playing it on an individual stock, whichever way works for you. But I think overall, if you're going to play the industry, this may be a great place to play that industry. And because it has options, you might want to consider buying options on the industry as opposed to buying on an individual. So just something to keep in mind, Marie, something to keep in mind. Mary says MJ looks to have options. So Rich let me know that, and so did you, Mary. Thank you very much. I appreciate that. And notice that if you want to subscribe to the YouTube channel, there's a link. Is that the link to subscribe to the YouTube channel? All right, for those of you who have not, remember, like, share, subscribe. That's it. All right, if you're new to this, like, share, subscribe. This is what we do every Thursday. And thank you for that, both Mary and Rich, letting me know that MJ does have options. All right, I'm going to close out of that graph. The next story deals with Disney. Now remember, Disney is really trying to get into that streaming business, and they will. And they are. And the thing that's going to hurt Netflix is that Disney has got a vault full of content as compared to Netflix. Disney bans ads for Netflix. Walt Disney's Cold War with Netflix over streaming is heating up, with Disney banning Netflix advertising across its television networks. So think about it. Disney has ABC. Disney has ESPN. I think that and they may have somebody else, I'm not sure, but I know they have at least those two, and they are now banning ads for Netflix. They carry a big stick, Disney does. All right, that's a headwind for Netflix, which spent $1.8 billion on advertising. So I look at it this way. If Netflix is willing to spend that kind of money, I would say Disney should take that money and run. But Disney is like, listen, I got more content than you have, Netflix. And you know something? I don't need your little stinking money. Don't need your stinking money. Badges? Who needs stinking badges? Money? We don't need your stinking money. And Disney is really going into that space. And Netflix is already losing market share, with a lot of people canceling their subscriptions to Netflix. I, for one, am not one of those people. Joe, you have Netflix?
I am.
See, Joe, you going to cancel?
We'll see.
All right, so Joey said, you'll see. It really is a possibility?
Yeah. I mean, I think Disney's going to have a lot of good stuff.
So Joey thinks that Disney's going to,
It's going to work in my household.
Well, you got children. So Disney will work pretty much in your household. But nonetheless, Disney's got a lot of content that they can stream at any given time. And I think that will definitely hurt Netflix. Earlier this year, Disney had decided it wouldn't accept ads from any rival services, but has so far found compromises with every company but Netflix, because they know that Netflix is the big fish in the sea. All right, the big fish in the sea. Nice coif on Glenn in Fu Manchu beard. Oh, you like my beard? I like that. This is my Fu, and I got my hair cut and I shaved. I did all of that just for you guys today. Well, I did it for the panel yesterday. Let's take a look at Disney. All right, let's get back into the software. Disney is in our list. There it is. Disney, right now, overvalued. I'm thinking that the story behind Disney and that Disney is really taking on Netflix. More and more people are jumping into the Disney stock, which is now people are willing to pay a premium to own Disney, especially if they feel that the battle going on between them and Netflix, and if Disney comes out on top, Disney stock could soar. All right, so let's look at the fundamentals of Disney, though. RV, the upside potential, not nearly as good. Now, I not only have Disney in here, I do have Netflix, all part of the same story. I look at the upside potential on Walt Disney, not as good as the upside potential on Netflix. But if I'm looking at the relative safety, this stock, Disney stock, is a lot more safer than Netflix because it's been around a lot longer. It's not a fly-by-night company. Netflix is relatively new compared to Disney. Disney has a nice safety factor. Netflix is above 1, but not as strong as Disney. What's hurting them both? Disney is in a downtrend by way of RT. The stock is trending down. And Netflix also down. Now, notice that both of them are hold recommendations. Also, keep in mind, look at Disney's earnings growth rate. Disney's earnings growth rate is in it. They're growing their rate at a negative clip, whereas Netflix is really blowing it out the water compared to all of these stocks on here. They're growing their earnings at a rate of 26% a year. That is huge. All right, just keeping that in mind. And talking about what Disney owns, Paul says Disney owns ABC, ESPN, Touchstone Pictures, Marvel, Lucasfilm, A&E, the History Channel, and Lifetime. That's a lot of stake in the entertainment business. Thank you very much for that, Paul. Thank you for that. So Disney's got a lot of money. Think about all of those things that Paul just typed in. Disney's got a ton of money, whereas Netflix is primarily a streaming platform on content that people make up, try to make up on the fly. Now, have they had great success with some of the content? They sure have. But Disney's got the vault of stuff. All right, so watch that. Disney's trying to make a move to at least possibly move that earnings growth rate to the positive with putting out that content, something to definitely keep your eye on. I'm going to take a look at both of those graphs for you. Let's view the stock graph. All right, there's Disney. Going to put this on a 3-month graph. There's that earnings. All right, so Disney's getting affected, which is why maybe going after Netflix and going after that streaming business can turn the business around, right? The price is falling below the 20-day exponential moving average. Earnings is falling as well. This could be the means to get them out of the doldrums, even though Disney is a more established name. It's been around for quite some time, but even good companies go through bad times. Going after Netflix, going into that space that there's a lot of money to be made could definitely turn them around, right? Let's go over to Netflix, on the other hand, still trending down, but look at their earnings. So even with, and you know where that earnings comes from? Even though they may be losing subscribers, they've got a ton of subscribers that are paying. And guess what? They bumped up the subscription rate, and people like me are still paying it. All right, Joey is still paying it. You know why? Because the content is good, but you know something Joey is thinking about, maybe taking that off the table and moving to Disney. Why? To conform to his household. He's got 3 kids, awesome kids too. He's an okay dad, but he's got awesome kids. And you know something, that may be more reflective of what needs to be done in their household. Notice that Netflix, by way of the story, look at it. It just bumped above that 20-day exponential moving average. So if I had a choice for either one, right now I'd be more in tune with Netflix right now, as it is nicely moving up off of this level of the low. I love the earnings per share is growing. Let's go back to Disney, not as much. But this information of going after Netflix could turn them around. It hasn't happened yet. All right, so hopefully that makes sense. And Disney is more diversified, says Jay. I agree with that. They are. But they got to get on track to start moving the price of the stock in the right direction, and they need to start growing their earnings. All right, there you go. Now, let me close that graph. The next story is about Hewlett-Packard. Hewlett-Packard is to cut up to 9,000 jobs in restructuring. I was part of restructuring once when I was in corporate America. That's when I was working for Johnson Controls. And I thought restructuring was great. We're going to do this, we're going to do that, and life is going to be great. I didn't understand corporate America at that time, and I was like, whoa, this is going to be great. Next day, my boss says, hey, Glenn, come to my office. By the way, we don't need you anymore. Here's a severance. I was like, but I thought we were going to do great things. Yes, we are going to do great things, Glenn, but without you. Wow. So I said to myself, I'm not working for corporate America ever again. Never say never, you never know. And I love that I've been with VectorVest for the last 15 years. We are privately held. We are not corporate America. But that was my first taste of restructuring. And so now, Hewlett-Packard, why do you restructure? Because you've got to get your company back on the right track, right? You remember when they hired in a young lady as the CEO to turn them around, and whether it worked or not, you know, it was, man, they're doing a lot of things to help to get this name, Hewlett-Packard, back on the right track. The guide's 2020 earnings per share below consensus. So in order to not be in the red when it comes time for the stockholders report, you cut that many jobs, it's going to help to keep you in the black. All right, that's an unfortunate reality of corporate America. Announces a major restructuring that will include the elimination of 7,000 to 9,000 jobs from its workforce of 55,000. Now, there is an upside to that. Remember I showed you the story that about the jobs? We're at where we need to be for jobs in the first time in about 50 years. No matter what you want to say about the economy, what you want to say about the president, all I got to say is in this administration right now, Jobs are where they're supposed to be. They really, really are. And the best jobs report in forever. All right, so just keep that in mind. Now, let me go down. But in the short term, the restructuring will weigh on HP's bottom line. Just what I just talked about, right? So if I can save money by cutting 9,000 jobs, that should keep me from going into the red. The company forecast of fiscal year 2020 GAAP, I don't know what that means, don't want to know right now, earnings per share of about $1.98 to $2.10, well below the $2.18 forecast. So think about it. If they don't cut their jobs, they're already going to be below the forecast of $2.18. By cutting the jobs, at least they won't fall nearly as low below that $2.18 earnings per share. So I think the job cut is trying to keep them, if they do go in the red, not to go too deep into the red. All right, so that's what the story says. And let's go take a look at the stock. If we go to HPQ, there it is. The stock is undervalued. For those of you who are new, we give a value to every stock in our database. Currently, the price is below the value, so it is undervalued. Hewlett-Packard, though, still has good upside potential over the next 1 to 3 years. The safety is not so good. Why? Because safety is tied into earnings. All right? The company's ability to meet or exceed earnings expectations quarter over quarter, year over year. If they are missing earnings, relative safety is going to be affected. And the relative timing telling me if the stock is in an uptrend or not still tells me if the stock is currently in a downtrend, and it is a sell recommendation. Good thing, though. They are still growing their earnings at a clip of 16% a year. All right, and their earnings per share is positive at $2.27. They do pay a dividend. The yield on the dividend is sitting at 3.99. The stock is trading at $16. Look at that. Look at the earnings yield at 14. All right, so they are making the money that's not a bad way to be. It's just that having to stay in the black with having to have 55,000 employees and trying to hit the expectation of $2.18. We have our earnings per share forecasted at $2.27. So that's what's going on. Rich says, generally accepted accounting principles. Oh, is that what that GAAP? Thank you, Rich. I didn't know that. I really didn't care. But thank you for making me want to care a little. Do you care, Joey? Joey says he doesn't care either. But you took the time to look that up for me, and I appreciate it, man. I really do. All right. So that's what's going on with Hewlett-Packard. I do like that it's undervalued. I do like that it's got good upside potential. But it is being affected fundamentally by way of the indicator of risk, and it is, Joey, it is definitely moving down. You see what he said to you? Talk about that. I'm going to go get me some donuts today. I'm going to get me some chicken and donuts. All right, let's go to our next story. The next and last story is Ally. So many of you have been listening and finding out that a lot of the major brokers are definitely cutting out commissions. All right, are cutting out commissions. Ally Invest is the latest to slash online trading commissions. So we're going to look at a couple of online brokers, but we wanted to look at Ally because they are one of our broker partners directly tied into VectorVest. For those of you who are new, we do have a tool within the software called RoboTrader, where you can actually use that tool as a catalyst between the VectorVest software and your broker. In this case would be Allied. It's one of 3 that we have. And you can actually trade directly from the software to the Allied broker through RoboTrader. So keeping that in mind, with these trades coming up as no commissions, Allied Financial Online Brokerage and Wealth Management arm joins the pack in eliminating commissions on U.S. exchange-listed stocks, ETF, and option trades. That's on the U.S. side. For those of you who are in Canada, I don't know how that's going to affect Canada, But in the U.S., they're cutting it down to zero. Effective October 9th, which was yesterday, the per trade price of $4.95 moves to zero. Now, I do have a Robinhood account, and in Robinhood, they came out as a brokerage with no commissions, and I was wondering how long it was going to take for companies to feel the effect of Robinhood, people migrating over to Robinhood. And it's interesting that Schwab, Interactive Brokers, TD Ameritrade, now Ally are all falling into that no commissions. Now, my thing is, how do you make money as a broker if you're not charging commissions? So I did a little thinking in the back of my head and said, all these years, the commissions was what they were. They were making money hand over fist on investors. Because if you can now go from way back in the day to $50 in, $50 out, $100 round trip, to now being in today's time, being down to zero, that means commissions weren't needed. They did not need commissions to make money. How do they make all of their money? With all of the assets they have on hand. That's where the money comes from. All right? So just very, very interesting. Kirby says, saving us $3.95 per trade with RoboTrader. And Ally is my broker because it's connected to VectorVest. He removed my commissions like the other brokers and kept my options contract to 30 cents. Way to go, Alessandra. Fidelity joined the no commission group today. Look at that. So everybody is trying to vie for the business in this space of online brokerages. And now look at that. So not only, who did you say that was Fidelity? Kirby says, Ally has the very best customer service. You actually can talk to a person quickly when you call. Look at that. So Kev says, are we being pimped? I ain't saying being pimped. I'm just saying that brokerages think about that. How quickly are all of these brokers falling in line? Because they were like, well, the commissions were really the icing on the cake, so we can do without it. As long as we have the amount of money that we have on hand that we're managing, that's where the money is being made. So very interesting. E-Trade 0 as of the 7th. So let's talk about that. Let's go look at the effects of that. We're going to start with Ally. The story was Ally. Ally is nicely below its value, good upside potential. The safety is not there, but it's got good upside potential. What's hurting it right now? It's going down. So you want to know something else that I read about these, and all three of these are what we're talking about: Schwab, Ally, and Ameritrade. Notice that the RTs on all of them are below 1. So I was curious to know why those are as low as they are. All right, you would think that with zero commissions that they should be running. You would think that. So I read an article, and the article stated that because it's going to be more risky for these brokerages, because people who may be novices are going to be more inclined to trade a little bit more recklessly because they don't have to worry about commissions. So I'm trying to think of the validity of the story. Do you agree with that or not? All right. And Alessandra says Ally was just downgraded. So this is part of why they are being downgraded, is the idea that novice investors will invest a little bit more recklessly because they don't have to worry about paying commissions. Do you guys agree with that or not? That is a lot of why they are being downgraded, Alessandra, and that's why their RTs are below the value of 1. So I'm curious to know, do you guys agree with that story or not? Kirby says, but Glenn, now that the icing on the cake is minimizing, their earnings may be down as well. Notice that all of these companies have an earnings per share greater than $2 at least, and they're all growing their earnings at a clip of double-digit growth. So, Kirby, good statement, but we won't see the effects of that until this goes into effect for a little longer than what you see right now. No low commissions have been around for novice investors way since the day it cost you $75 to do a trade. And you're right, because I barely remember the days where it was $100 round trip. And then the big number after a while was $9.95 per trade, and everybody jumped on board to $9.95 a trade. Now everyone is getting down to Zero commissions. Zero commissions. So think about that. Commissions were really icing on the cake. I do not agree with the article. It's still my money and I hate to lose a dime. I hear you, Badger. I totally. So Tom is saying pretty much that with commissions or without commissions, he's going to invest either way with the aspect of not trying to lose money regardless. So I hear you. I just wanted to hear your input on it. All right. So those are all three stocks. Notice that all three, Schwab, Ally, and Ameritrade, all have good upside potential by way of RV. Notice that Schwab and Ameritrade have decent safety values where Ally does not, but all three are in a downtrend. And Ally, even though the safety is not there, is the only stock out of the three that is a hold recommendation. So comparing all three, if I'm looking at which one I want, let's go look at the graph to make a decision. So I got those three highlighted. Notice that they're all up today. Notice that they're all up today. Let's go view the stock graph. And let's see if I had to make a choice between either one of those. Let's put this on a 3-month graph. All of them probably will be below the 20-day moving average. But notice Schwab starting to make a nice little move coming up off of a level of a low. Not a lot of movement. Got some dojis going on, indecision. Not a lot of movement. But and look at the earnings per share. Man, oh man. All right, let's go see what the other ones look like. Ally, bouncing off of a level of support, still below the 20-day moving average, but like the earnings per share on it. Remember, earnings is the engine that drives the stock's price higher. I do like the earnings per share on Ally. I feel that it's a higher probability to get above that level of the 20-day exponential moving average. But look at from this high that occurred on 9/13, look at the trend of the stock moving down. And I think that all three are going to be exhibiting the same things. Ameritrade took a gap down twice. No, actually, that's not the... Took a gap down. Look at the earnings on Ameritrade. So the only one that does have positive earnings is the Ally stock. All right? Looking at, I do like the rebounds on all three. But if I have to go pick one, it's the Ally stock because the earnings is much better than the other two. All right, and Ally pays good dividends. Let's go put, there it is. Ally has a dividend of 68 cents. Let's go look at, Ameritrade has a dividend of $1.20. And let's go back up to the top one. Schwab has a dividend of 68 cents as well. So all three pays a dividend. And Mary, I'm with you. Mary says Ally is my pick. I think that if I had to make a decision on the story based on all three stocks, Ally would most likely be my pick as well. All right, so those are all of my stories for today. Here's my watch list of all of the stories. And you know what I like about this watch list of stocks? I look at the overall watch list average. Relative value, relative safety tells me that these are prudent stocks. The stocks are all together as a whole going down, but they all have a VST put together greater than 1. The earnings growth rate as a whole is 11%. I love this watch list average, and I'm going to talk more about it every week when we go through this process at the end. That this gives you a nice feel of the stocks in the stories and how they, by way of VectorVest, how they look. All right. Now I'm going to go to the graphs. I'm going to click on Add New. Now I'm going to give you a time to look at stocks that you want me to look at. And while that's happening, let me catch up on some of this. Richard says, similar to what automation has and will continue to do to labor costs moving forward. All right, and Richard, automation significantly cut. Oh, you're talking, that was probably the Hewlett-Packard side, Richard, I'm assuming. Saborium says, plus, yeah, that's right, Interactive Brokers and TradeStation have gone commission-free. So it looks like just about all of the major, all of the major brokers are now in that field or in that realm of zero commission. All right, so there we go. All right, so the stocks are coming in. Jay, I don't want all the stocks in the world from just you, OMG. But I will take GNRC. That was from the stock panel yesterday by way of Patrick. And Crocs, comma AAPL, comma Home, good stock, comma NM. Is that from New Mexico? Oh, Navios Maritime. Haha. Home GNE, comma AJRD. I don't even know that stock. Wow. Aerojet Rockadine. Wow, thank you for that, Kev. I didn't even know that stock existed. Richard said no. Oh, the cost of trading, Richard is talking about. All right, I got you. IMPE here. You using my stock from the panel yesterday. DDS, sounds like a dentist stock. Haha. GE, they bring good things to living. They bring good things tonight. Nat, that's another transportation company. Glenn. Is there really a stock called Glenn? No. See, you got me. I didn't know. You was messing with me. No, I didn't know that. Leave me alone, Joey. All right. AMKR, UUU. I'm gonna write a song. You. Energy fuels. You. All right. Enough of that. I don't know why that just came from. It came from somewhere. VER, DAC, hi Manashore, you want V for Visa. I'm going to take just a couple of more. LPG, my last one is WWE. There we go. Wow, that's messed up, Kev. Kev said dogs are hollering. All right, BEP. Tracy, you're the last stock. No more stocks. Wow, that's messed up, Kev. Did you agree with Kev? No, so I sang good, right?
That was fantastic.
That was fantastic. Way to go, Joey. Kev. Hello, is it me? Hello? Is it me you're looking for? Tell you folks, got to have some fun, right? Got to have some fun. GNRC. Let's go put on a 3-month graph. I like that the stock is above the 20-day exponential moving average. I like the last 2 days of volume, and I like the earnings per share. Not a bad trade, except for what don't I like about it? The stock's price just broke above a level of resistance today. But look how much is coming back down. Look at the selling pressure. Be careful with this. Even though the stock's price went above to resistance today, which was good, and Patrick was looking at this stock yesterday. Even though it went above resistance today, let's see if it can stay above there or if it will pull back. JJ says, I think adding singing lessons to your Christmas list would be a good idea. Wow, everybody's jumping on my singing. Wow, you guys are brutal today. That's right, I love it. All right, let's go to the next stock. Crocs, man, that's the epitome of what a good stock looks like. Nicely above the 20-day exponential moving average, serving as a good level of support. How about even when it pulled back, where did it stop? Right at the 20 and still moving up. Right now, I wouldn't buy it today. A little bit of selling pressure. Look at the big wick. A little bit of a, who knows what that chart pattern is? Who knows what that, what's the word I'm looking for?
What happened?
I don't know what happened.
It's like YouTube just said no.
Oh, did it really?
Yeah.
Oh, can they still hear me?
I have no idea.
Oh my, I'm gonna keep talking. So YouTube just shut down. That was interesting. Did they not like my singing too? Wow. Are people still here? Can they hear me?
I can't hear you.
Oh, that's interesting. Wow.
Let's see what happened here. The house still says good.
If you can still hear me in the room, type that you can hear me in the room. If you can still hear me in the room, type that you. Wow. Did it come back? That was interesting. Is it just shut? Glenn, your singing blew the YouTube feed down. She goes, wow. Wow, I lost the pick also, but can you hear me? I think he is practicing singing now. I don't think they can hear me.
Oh, there you go.
All right, can you hear me? Wow, I lost the pick also, but can you hear me? All right, so now you guys should be able to hear me again. What happened to Kirby? How did Kirby get... Wow, what did Kirby do? How did Kirby get kicked out?
He might have messaged 3 times.
All right, yes, you can hear me now. Can you see my screen? Can you see my screen, Joey?
Yeah, I think everybody can. I think you're back.
Wow, that was quite the interesting thing. I'm never singing again. Holy smoke. I'm not singing anymore. All right, so Crocs, you mentioned it in the broadcast and the whole webcast went dark. Wow. All right. Anyway, does anybody know what this candlestick pattern is right here? Does anybody want to venture out what that candlestick pattern is right here? Nope, I'm not singing. Kev said that the dogs were howling and I'm not singing no more. Does anybody know what that candlestick pattern is right there? Right there. Anybody? It's actually could be two different patterns. A graveyard, that's one. Way to go, Jimmy. That's one. Not a reverse. I'm not going to call it a reverse hammer. A shooting star is the other one. And it is a doji, nonetheless, Alessandra, but it is more, this is what you would call a graveyard doji. There you go. And no, it's not a hammer. That's not a hammer. It's not even inverted. It doesn't have enough body to call that a hammer. But that could, both of those are possible bearish reversals. Both of those are possible bearish reversals. So now with today's activity, I would just be careful with it. All right, I would just be careful with it. Let's go to the next stock. Apple, above the 20, looks good. Interesting that earnings doesn't look very promising. It's starting to move up again, but a little back and forthness on the earnings per share. Volume is pretty steady. Price action, though, does tell me that the stock is above the 20-day exponential moving average and has been serving as a good level. How about on the pullbacks here? Stopping right at that 20-day, that's a good level to keep your eyes on. If you're playing it, I would go 12 cents higher than the high to get into it. I wouldn't get into it just quite yet. All right, I see the wick at the top. Apple, what about the fine impact? What do you mean? Talk to me, Jay. What do you mean? I'm not sure. Let's go put this on a 6-month graph. Put this on a 1-year graph. Apple is still moving up. Now, actually, it's about the level where it was, almost just a little bit above the level it was last year. So a little bit higher than on a year-over-year basis, and not Loch Nessy. The earnings per share is not very Loch Nessy. Yeah, it is. Could be like the Loch Ness monster. 6B for euro announced yesterday. Talking about in Apple. All right, 6 billion for euro? Is that what you're saying? All right. It could be Loch Nessy as far as the earnings per share. So I can go with that, Tom. Let's go to home. Home, I'm not going to sing. I was going to sing home, but I'm not going to sing it now. All right, it's above the 20-day exponential moving average. Even though I like the price action, watch earnings. Watch earnings. Earnings doesn't make me feel at home, not nearly as much. And notice remember when it was moving up here? Look at the bigness of the candles. As it's moving up here, look at the smallness of the candles. So it looks like the stock is moving up begrudgingly, but earnings I'm probably helping to pull it down right now. All right, so just keep your eye on that. I like the price action. I just don't like the earnings. Tom says, I looked it up in the Glenism dictionary, and it said Loch Nessity. Loch Nessity. Look at that. All right, Navos Maritime. Overall, looking over the last 3 months, what's the stock's price doing? Moving sideways. In a sideways move, moving averages don't work nearly as well. So I'm going to put stochastics on. I can play the levels of the 80 when the stock is considered to be in overbought territory. Let me darken that up a little bit. When the stock is considered to be in overbought territory, what tends to happen, the stock's price pulls down. Here, right here in overbought territory, look at the stock's price pulling down. So I'm going to take the moving average off of Navos Maritime only because it's more so moving sideways. I'm going to also draw a line at the level of 20 when the stock is considered to be oversold. So let's make that a little darker. Style, make that a little darker. So when the stock's price gets to oversold territory, what tends to happen? Stock's price starts to move up. Oversold territory, and look at this one. The stock's price didn't really move up. It started moving sideways. And most recently in the most oversold territory, nice movement up on the stock, captured with a lot of good volume as well. What I don't like about the stock, I'd like to see the stock get out of its own way. Nice level of resistance right there. Let's see if the stock can break above that. Now, if I don't want to wait that long, that's just $7. Well, then let's get 5 cents higher than the high. Let's get to about that $6 range. You can jump on board if it gets to $6, but use the profit target of the level of resistance at $7. So what can you do at that point? You can make a buck on the stock if you get in at the right time, making sure you're buying into the stock as it's rising. That would be your profit target because that's a beautiful level of resistance. Jimmy says if it breaks 10, it's going to 17. You know me, I do not prognosticate what a stock or the market is going to do, but I will say if it can break above the 7, get to that level of the high over the last 3 months, The 3-month high on the stock is sitting at $8.10. I can say that it probably has some upside. There's 6 months. So that $8.10 is on a 6-month high. It's on a 1-year high. So Jimmy may not be wrong. Once he gets above that high, that's over the last year, folks. It could have some good upside. But first, let's take this a step at a time. What am I looking for first? I'm looking to see if the stock can get up to that level of about $6. Why? Because look at the wick. The wick stopped right at $6. Let's go, about $6. Once you get it to that level, you can buy into the stock, or you talk about home. All right, Jimmy, you can buy into the stock. That would be your profit target. So now Jimmy's talking about home. Home says if it breaks, let's go put that on a 6-month graph. No, I got some room. What's that stock price? About 17. So Jimmy's right. If we can get to this level of breaking above this gap, Jimmy's absolutely right. We got some good upside to that, to fade the gap. We've got definitely good upside. So Jimmy is right on point with that. Right on point with that. All right. If we can break a beautiful level of resistance, if we can break above that, folks, this is something to keep on your watch list right now, because if we can break above that, this stock could really rock and roll. Really rock and roll. Keep that. Whoever gave me that stock, that's a good looking stock to keep. As a matter of fact, I'm finna write that down. Where's my pen, Joey? Did you steal my pen? I think you did. But I'm actually going to write that down. That's something to definitely keep your mind on, keep your eye on. I like that. And use that level. And if it breaks above, folks, it can start to fade the gap. That would be a nice looking trade. All right, GNE, another gapping stock, right about here. Who gave me home? That was a good play. Shorted. I'm not sure. Whatever, Rich. I'm not sure. I'm not shorting that. Not right now. All right. Now, unless it breaks. Now, if home breaks down and it goes below, I got a level of support down here at the low. I can play this channel. Remember, I was already looking at this by way of stochastics because of the channel. I'm not ready to. There's nothing telling me to short this stock right now. Kirby, what about downward earnings? See, that's very true. Thank you for that, Kirby. The stock's earnings will scare me. All right, but look at this nice move out of the channel. Get to the lower part of the channel, the middle part of the channel, and now at the upper part of the channel. Price is moving on it, Kirby. That's what I'm looking for. That's what I'm looking for. Home scheduled to open 4 superstores very soon. So retail home furnishings. There's a lot going for it, but there are things to look at as well. All right. Let me get to GNE. What is it pretty much doing? It's moving slightly higher, but more so in a sideways move. How about, let's go to this level right about here. Let's go put on here, and let's go here. So the stock is in a little bit of a channel. Again, another stock in the channel. I really would like, if this stock can come up, fade that gap. Stock is with the nice little move, slowly moving higher, getting to the higher part of the channel. The stock did move from a sell to a hold. Same kind of scenarios Kirby talked about before. Look at the earnings per share, though. Put this on a 3-month graph. That catches my attention. I'm going to take off stochastics. That does catch my attention. And look at that. Stock's price is definitely moving in this channel. Even if it breaks above, it's got another channel to get, it's got another level to get out. That's $9.90. That's almost $2. That's almost $2 to move. David says another option, excuse the pun, rather than purchasing home is to write some at the money puts on the stock. There you go. So now guess what? If you like home as a stock, I don't know if I would, if I'm really willing to own the stock if it gets put to me. That's my only issue, David. If we go back to home, I'm not sure. Look at the graph. Oh, no. I take that back. I might not mind owning it at a lower price, but it's still in the channel. I don't, David, I am going to do that on a stock that's definitely moving higher. All right, does that make sense, David? I'm trying to look at, man, home is just, yeah, I want to, if I'm going to get put a stock, I want to make sure that it's not in a channel. I want to make sure that it's really, really moving higher, all right? And then if it pulls back, I don't mind owning it because I know the prospect is that it should be going back up again. All right, Jimmy says, I only trade call and put buys, no spread, no butterflies, no condors, no roaches, no insects. That's all right. There's nothing wrong. I made a lot of money trading just calls and puts. And you know something? It exposes me to a lot less risk than owning the stock outright. When the recession hits, it's going to tank. No thanks. Well, where's the recession at, Trade Shark? Recession is nowhere near here yet. Nowhere near here yet. I'll talk about that in the software on Friday. All right, let's go to AJRD. Trending down, like the earnings per share, but the stock, not the right time to be in the stock. Stock is trending down. It almost started to get to the point where it faded this gap, not quite there. This is where the gap fadation will click in, but not quite there yet. Not quite there yet. You buy the calls, I'll sell them to you. That's fine. I'm all right with that, Trade Shark. I'm all right with that. You know something? I don't prognosticate what's going to happen. I take what the market gives me, and I teach people to do the same thing. The more times you try to guess at what's going to happen, the recession is coming. All right, when? Do you know when? No. So if the market is moving up and I'm afraid to buy because the recession is coming, what am I doing? I'm leaving money on the table. Let the market guide me on what to do. Let the market guide me on what to do. And you know something? I know you play a lot of option trades, Rich, and a lot of short-term trades, and you do well. That's absolutely right, but not everyone is like you. And you know me, as I teach a group of people, I try to keep it on an even keel for the people who are in the room. And you're a lot more of an aggressive trader. I solely and totally understand that, but not everybody is like you. So, I mean, it's cool. And from that perspective, I don't know when or if a recession is coming. I just don't know. So we'll keep that way. AJRD, moving down. If you own it long, you shouldn't be. I'll even put moving averages on here. Yeah, the 3 and the 8 has been bearish since a minute. This is where the 3 and the 8's cross back on 927. If whoever gave me the stock, if you're owning it right now, you shouldn't be. Using any kind of moving average crossovers, let's usually even put on the 20. How about even on the 20, it crossed below? So if you own it, you shouldn't. But if you own it now, what are you doing? Man, you got to, at some point, stop the bleeding. I do like the earnings per share, but not the right time to be in this stock. Not the right time to be in this stock. All right. Hey, have a good day, Rich. Hit him straight. Wow, IMPUY, love that. Platinum stock, moving higher. Man, moving higher. Look at that, above the 20-day exponential moving average. Love the 3-month move. What more do I need to say about it? Good looking stock. Is it too late to get into it? At a $7 stock, as long as it keeps moving higher. This was in the panel yesterday, moved up some more today. If you're not in it yet, let's see if you can get 5 cents higher than the high. That's what you're looking for. And then let the stock ride. If you're looking for an opportunity to get out, use either the 3 and the 8 or the 20. Well, the 20 would be sustained. Use the 3 and the 8. There you go. That would get you out a little quicker than the 20. Use the 3-8 crossover to the downside. That will help to mitigate loss. Man, I love that stock. DDS, not Dentist, but Dillard's. Rusty says it was work up 4% today, not KDB. I don't know if I have work in this list. All right, but I'm going to have to get through this list a little faster. All right, you gave me a lot of stocks. I'm going to get through this list a little quicker. DDS, moving up, earnings moving down. Be careful. That's what we call a bearish divergence. Be careful on Dillard's. Be careful. Now, I do like that the stock just became a new buy recommendation, but this is a bearish divergence. Be careful with it. GE, moving down, even by way of the 3 and the 8, by way of the 20. If you own this stock, there's no good news coming out with GE for the longest time, all right? So I'm not sure if you do own the stock. I'm just curious to know why, if you do. Nothing's been real positive about it. I do like that the earnings is rising, but man, look at the trend of the stock, trending down. It's starting to pick back up again by way of the 3 and the 8. Just be careful. This is more cyclical. It'll go up and go down, but overall, look at the trend over the last 3 months. Let's look at the trend over the last 6 months. It did have a little bit of a run, but man, just since August, the stock is not, even with the rebound, it's still in a downtrend. Just be careful with GE. The transportation ship industry is rocking. All right, this is one of the stocks that are in it, and it's almost parabolic. Look at that move. Look at that move. GE doesn't move, says Jimmy. Yeah, it moves a little bit. This was a nice little move. from about $8 to about $9.50. So $1.50. And right now it's moving from $9.50 down to about about $1 moving to the downside. So it all depends. On the $8.40 stock, that's a nice little move. That's a nice little move. Good afternoon, Lee, by the way. I can't add any new stocks, my friend. I got to get through these, and Joey is yelling at me in the background in a quiet voice. Oh, REIT equity. REITs are rock and rolling too. Alessandra, good trade right here. Stock is still moving up. Watch though, as the stock is getting higher and higher, the bodies of the candles are getting smaller and smaller. But the 3 and the 8 are in play. The 20 is in play. You're good on both of those. VectorVest shows the value of GE to be $3.08. Let's go back to GE value. Remember, our value is what we feel the stock is worth based on earnings and earnings growth. Let's go up to add this value. There it is, $3.35. And it just goes to show, where is it? Value, $3.08. The stock is overvalued. The stock is definitely overvalued, David. So what does that mean? That I'm paying a premium to own the stock. GE needs a war. Could be. A lot of stocks could use a war, Jimmy. I'm with you on that as well. So yeah, our value is what we feel the stock is worth. It's not a profit target, but it gives me a sense of if I'm in an under or overvalued stock. Currently, GE is overvalued, and that would be at least setting up a red flag, but overvalued stocks altogether are not bad stocks. All right, let me get through these stocks, folks. AMKR moving up. Watch the earnings per share is falling. That is also a bearish divergence. Maybe the stock is starting to fall into play right now. Look at the stock's price moving down 3 out of the last 4 days. Stock moved from a buy to a hold. Earnings does concern me on that stock. Moving a tad bit sideways. Not a big move. And even with the big move up today, look at that. Look at that pullback. This is more of an aggressive trade. Definitely more of an aggressive trade. You just got to be in on the right day and out on the right day. But look at that pullback on that stock. All right, let's go to the next one. Wow. Pharmaceutical. Whew. I bet you it missed the FDA, an FDA. I'm going to go to the news. 30 Biotech. Let's go to press release. I want to see what made that stock. 14 days ago, present at the 2019 Cantor Global Healthcare Conference. Something made that stock go fall down, go boom. And man, big. Look at that rebound though. Look at the big wick on the bottom. The bulls are trying to come back in and drive that stock's price up. Very volatile stock. Be careful with it. All right, Verit, another REIT, moving up. Not as good as O. Not as good as O. And Jimmy's like the bios are getting hit. I don't disagree with that. I like the upward move on the price, but if I had a choice between the two, between VER and O, I'd rather go with O. All right. Another shipping company. Be careful with this one, though. Price is moving up, or earnings are moving down. Not only is the stock's price moving up, look at the rising volume as well. So people are jumping on board. Why? Because it's a hot industry. It is a hot industry, and people are trying to get a piece of that. But watch on this particular stock. Danios, the earnings per share is going down. Tom says, DAC is rebounding from restructuring. KL is gold. What Sting is to transport. Got you. All right. Glenn likes, I'm not singing. All right. Visa. Be careful with it. It could be setting up for a nice upward move. Let's see if in either the 3 and the 8 just crossed. But it didn't cross above the 20. Stopped right at the 20. I do like the earnings per share. This could be setting up, hitting higher lows. This could be setting up. You need some kind of a trigger, whether it's the 3 and the 8, which happened today, or the 20, which if the stock price moves up tomorrow, should happen tomorrow. All right? Could be setting up, but overall, what is the stock doing? A little bit of a sideways move. Stock has been now a hold for a few days. LPG, another transportation ship. All of these companies are going to look the same, moving up. I do like the earnings per share on this one. One of them I didn't like the earnings per share on, but a couple of them I did. If you're going to jump on board, favor the ones that have rising earnings. WWE is getting a smackdown. You get it, Joey? All right. WWE is moving down. The 3 and the 8 are bearish. Below the 20, it's been, man, I'm not ready to touch this. I do like the earnings, but they're not the right time to be in the stock. Not the right time to be in the stock. And the last stock we have is Brookfin. Wow, utility. Utility is always something that we need as well. Down day today, big down day today. Wouldn't touch it today, but the stock, look at that moving. Look at the volume behind it. Look at the volume behind it. Joey, get the hook and yank talent in, yank the talent into tomorrow. What does that mean?
It means it's time for you to go.
Oh, is that what it means?
Yeah.
All right.
People get the back of the umbrella and pull.
All right, there we go. So I'm done. Thank you guys for being here. Hopefully, looking at your stocks at least gave you some insight on what the VectorVest software is saying about them. Joey's kicking me off. It's only 3:11. You're going to start playing the music. I'd like to thank my mom and dad. I'd like to thank everyone for helping. It is start playing the music. Thank you guys. If you like, share, and subscribe. Like, share, and subscribe. For those people who are brand new, if you like the content, like it, share it, and subscribe. Jimmy says, when do you do these live videos? Every Thursday at 2 p.m. Eastern Standard Time. Every Thursday, 2 p.m. Eastern Standard Time. So, new people, subscribe. And always click on the little bell, Jimmy, so you can get the updates on when we're going to have our next. And thank you for that. So, Jimmy liked very much. I have fun, but more so, it's all about some information. Kirby says, great job. Thank you. You're welcome, my friend. All right, with that, folks, I'm going to sign off by saying adios, arrivederci, ciao, sayonara, no, au revoir, sayonara, see ya.